Hello everyone, welcome back to our Baya Financial YouTube channel. This month I would like to talk to you about what you can do as a first time investor into the property market. But before I start, please can you give us a like and a follow. It is great for increasing our reach and means that we're able to bring more content for you. So please do give us a like and a follow. Thank you. And also stay tuned. At the end I will be talking about things that you should avoid doing as first-time investors, so please stick around to the end. So first things first, what can you do as a first-time investor? And I'll caveat a few things. So today I'm talking about things that you can do as a first-time property investor who already owns or has previously owned your own residential home. If you are a first-time buyer, that does make things a little bit more tricky. It doesn't mean that we can't do it, but we are much more restricted. So for the purposes of today, I'm assuming that you own or have owned your own residential home. So let's think about what sort of things we can do as a first-time investor. So let's start with first the simple things of a single buy-to-let. So yes, you can do that, absolutely. Things to watch out for are some lenders have got a minimum income requirement, and some lenders that don't have that minimum income requirement do have slightly higher rates. So just bear that in mind. Ideally you would have an outside job at that point that's earning around £25,000 would be absolutely sufficient, and most lenders will take that as a combination across all of the directors or all of the applicants. So it's not a huge amount of money, something that is very achievable, but just watch out for that. If you've newly changed jobs or if you've newly gone self-employed, that could potentially be a problem. So a lot of people start with single buy-to-lets because they think that that is the one thing that they have to do first, that they need that experience before they can venture into other areas. And that's absolutely not the case. So what I would say is when you're thinking about what you want to do and how you want to get into property, think about where you ideally want to be in a few years' time, 5 years' time, for example, and let's work back from that point. So if single lets do not appear in your plan over the next 5 years, there's no reason why you need to buy one or should have to start with one. They make things slightly more tricky with other properties. The rate may be slightly more expensive, but in the long run, I think that things will even out, and it means that you're not tying up money in assets that you don't really want to own. So yes, absolutely, that's the easiest place to start, but please don't think that that's the only place that you can start. So let's then move on to HMOs. Very popular choice at the moment. It's something that I see a lot of first-time investors wanting to get into, and absolutely it's something that we can do. I'll split this into two. So you've got smaller HMOs, anything up to and including 6 bedrooms, and then you've got larger HMOs, which are 7 bedrooms or more, which is in the use class of sui generis, and that is a slightly different scenario. So let's start with smaller ones for now. Most lenders will allow you to borrow money as a first-time landlord on an HMO up to and including 6 bedrooms. There are some lenders that require you to have, larger minimum income requirements or to have a buy-to-let, but there are plenty of options. The rate doesn't need to be any more expensive on the first-time HMO route. So that's absolutely something that you can do. A lot of people ask me, can I get an investment value on that HMO as a first-time investor? And absolutely the answer is yes. The lenders that we have that lend on the investment value or allow the valuer to choose the investment value if it's applicable are probably more likely to lend to you as a first-time investor. The lenders with the lower rates that are more restrictive on a bricks and mortar can be more fussy in terms of experience. So actually, you're not discriminated against on those investment values as a first-time investor. So you could argue that you're more likely to go down that route because there's no increase in rate. You're already paying that slightly higher rate, but you're already then getting the increase in valuation to make it more worthwhile in theory. So that's something to consider. So yeah, that's absolutely fine. For larger HMOs, so 7 bedrooms or more, we are more restricted. So in normal times, I do have one lender who will lend to you as a first-time investor with no maximum number of bedrooms as long as you have a management agent in place. Currently they're not lending, on large HMOs because of the issues going on in the Middle East, but in regular times that is definitely something that we can do. So if you're unsure about that, please get in touch and I can clarify that for you. It is a slightly trickier area of the market. Often if you're looking at a refurbishment, again, and I'll come on to this in a minute, that can make it a bit more challenging. A lot of the time I will say to clients, make life easy for yourself on your first deal. So if there are challenges around planning, it may be simpler to stick to a 6-bedroom for your first project, prove that you can do it, get that cash flow in, and then worry about a larger one further down the line. But if it is something that you are absolutely set on doing, that's definitely something that you want to do, then please get in touch and I can speak to you, because it may well be by the time you're watching this video we're back on track and it's absolutely fine. So yes, so that's large HMOs. So let's move on to some other things. Let's talk about serviced accommodation. This is something that I think is becoming more popular with the rent reform bill coming in. People are looking at alternative solutions to that. SA is a great way of increasing your rental yield in comparison to a single let without having the ASTs in place and the potential pitfalls of student lets or professional lets. It's a great way to increase your income. So can we do SA as a first time investor? Absolutely, yes we can. There's no restrictions on that. There may well be if you're looking at slightly more complicated property types, so for example blocks of flats or HMO type properties where you're renting it out room by room, but as long as you're sticking to single assets, sort of family home type properties that you're letting out to families on an SA basis, that is absolutely fine. We've got a couple of different options depending on whether we need the income for the SA or whether we can use an AST rental income. But you don't need any experience, you don't need the property to have been rented before, you don't need any SA experience, and you can come to that as a first time investor. So that's another great opportunity to get in, to increase your cash flow, to allow you to build up funds for your next project. Let's move on to some other things. So let's talk about semi-commercial property. Again, something that you may want to get into. It's a great asset in terms of its mixed use, the different yields that you're getting, the different types of tenants that you've got. Generally commercial tends to be longer term tenants. In theory, less maintenance. Because it's generally a fully insuring lease, fully managed lease, and then you've got some sort of residential aspect to that as well. So you may have some flats above, you might have an HMO above, there's various different things that we see. What I would say as a first time investor is keep it simple. So where you've got a high street property, where you've got a shop and some flats above, or a shop and a flat which has been used as an HMO for example, something like that, super simple, that can be done. We may need a minimum income requirement. There's a few lenders that do it, they've got slightly different rules. If you do have that outside income, it does make life a little bit easier in terms of the rate slightly lower, but on the whole, yeah, it's absolutely fine. If you're starting to get into more complicated property types, so that could be larger properties, say a whole parade of shops with the flats above, that would be more complicated and that would be a no. So let's keep it to simple properties. Simple type of property, keep it simple to start with, learn the ropes, make sure you're confident and comfortable with that, and then you can move on to something more complicated. And finally, let's come to commercial property. So I think there is, with all these property courses that are being offered, there is a tendency to think that you can run before you can walk in the property world. People like to make things seem really super simple when in reality they are not. Commercial property is the most risky from a mortgage point of view because the demand for both tenants and for resale is lower than any other type of property or tenant. So it is more risky. The rate is considerably higher than residential or even semi-commercial property because the risk factor is so much higher. You're much more limited as to the lenders that you can go to. There's just not that many lenders within the market. And we would need you to have some sort of experience. So as a first time investor, I would steer clear of purely commercial property. So that would be my tip for today. Learn the ropes, see how you get on, and then you can branch into that once you've got a bit of experience. But I think it's really important to, like I said, learn to walk before you can run. I've seen so many people bite off more than they can chew and end up on their first or second development, it all goes wrong, and then they've lost the money that they need to recycle and move on, and it all kind of ends at that point. So just make sure that things that you're doing are manageable, and I'm all for challenging yourself and doing things that you want to do that are going to be cash flowing, and will get you to where you want to be. But yeah, going into something that's a bit more tricky is just that, it's a bit more tricky. So yeah, I hope that was helpful. If you haven't already, then please do give us a like and a follow as I asked, and if you've got any questions, then please do get in touch, and I look forward to seeing you on the next video.